when you wanted it to consolidate a little bit, it sprung up once again. And last week too, we did see a fresh high for ourselves, despite FII flows. Though India is actually underperforming vis-a-vis some of the other emerging markets. So just going to bring up the stats for you on your screens right now as to how is it that we've actually done as opposed to other emerging markets. The benchmarks, they did manage to hit new highs. We gained for a third consecutive week. Broader indexes as well have managed to outperform. And actually it was Nifty Metals which managed to outperform as opposed to what the rest of the sectors did. And yes, on Friday, it's been a fab finish, almost close to that 19,600 mark, which we did clock on Friday itself. We closed just shy of that, Nikunj.
But at least above 19,500, we managed to close above that level after a lot of failed attempts.
So you got to ask yourself is that, look, why did we underperform and why did world go up? Is there a change of narrative, at least in the world? There is no change in liquidity. The dollar index... Well, we've already become that. If you frankly ask me, looking at the flows, how markets have, really made a comeback. But frankly, if you really look at the market from a very myopic lens, which is that last week what happened, there seems to be a subtle change in the global narrative. Dollar index is below 100, but is inching higher. Everybody now seems to be baking in that the US economy will have a soft landing. So is there a change in the global narrative? Because a outperforming market like India, when it suddenly underperforms, and suddenly when global markets, they outperform, even though the case for global markets, at least for NASDAQ and for DAX, is not that fundamentally strong, is there a change in global narratives in terms of the global macro positioning? Too early to say that, but for me, that is the watchword. Back home, when it comes to India, the question you got to ask yourself is that what should be the strategy? I will say it again. I think it's time to go lazy in large cap stocks. It's time to be selective in mid cap stocks and don't go crazy in small cap stocks. I think we are reaching that point in the market where the gains now will be limited and restricted. In small cap stocks, you need to use the strength to book some profits. And in mid cap stocks, I think sliver of the market is offering value. Is offering value. Now, this is not the Nikunj Dalmia or the 18 of you what we had 3 months ago, but it's all a function of price and what the valuations are. My sense is, and I had a chance of meeting a lot of FIs, went for a holiday, met a lot of friends, family who directly, indirectly are fund managers in India. The sense is that in large cap stocks, you still have a little bit of comfort. In mid cap stocks, you have to be very selective, and in small cap stocks, I think it's time to book profits. So lazy in large cap stocks, don't be choosy in mid cap stocks, and don't go crazy in small cap stocks.
And Nikunj, even something that you've been discussing is that we need a new trigger for the markets. We're saying liquidity, macro changes, or earnings. Earnings are upon us now. We have critical names that will be coming out with their numbers this week. Reliance Industries, HDFC Bank, JSW Steel, Ultratech, etc. Is that, do you think, going to provide a trigger?
See, this is a big week.
Yeah.
And frankly, if you look at the market setup, the expectations from the entire market minus IT, I guess, are running high. The general consensus view is that banks will come out with good set of numbers and margins will be decent. The general consensus view is that most of the commodity companies will come and talk about recovery rather than headwinds. So the consensus is now clearly so the positioning clearly is on the long side, and the consensus view is that earnings will not only meet expectations, they will beat expectations. And that's the tricky part now. What we've seen in the first leg is that IT companies have bounced back, or IT stocks have bounced back. That's largely because nobody was expecting anything. But that is not the case. This week, HUL expectations are high. Reliance expectations are moderate. HDFC Bank expectations are really high that they'll pull a magic wand now that the merger has gone through. So it would be a tricky week to call. Now what you need to monitor is that are we in for massive upgrades or are we in for minor upgrades? If we are in for massive upgrades, then that's the trigger for the market, which I really doubt, looking at the growth numbers and the positioning. So if there are minor upgrades and minor tweaks on the upside, what happens to the market? I guess it could be a case of buy the rumor and sell the news. In IT, the same has happened. In IT, the reverse has happened. Yeah. But I think for rest of the market, it could be the other way around.
Yeah, talking about IT, what a blowout performance, irrespective of the earnings, which at large one would say were muted or a miss. You know, the question really is after that big contribution that you had from the entire IT pack and market cap agnostic, by the way, it was not just large cap IT names, but mid caps as well as small caps. They all participated in the move all through last week. It's seen the biggest weekly gains in about a year's time. The question now is whether this is just a dead cat bounce or will the rally for IT sustain? And with each IT earning, one thought, Nikunj, that this is just a one-day affair. Yeah. But no, IT managed to withstand all of it.
And delivery-based buying has been impressive, which means that a long buyer is actually back. So you got to ask yourself, is that has IT company... Is there anything big which has come out in IT numbers? The answer to that is no. Are they sounding very rosy about the prospects going forward? No. But is worst of the IT print behind us? That really seems to be the case. Now, what we've heard so far, I think, is from TCS and from HCL Tech. The tricky one, I think, would be Infosys. Yeah. Because that really holds the key. Infosys, in the last quarterly numbers, almost dropped a bombshell when they changed the guidance. Are they likely to be far more sanguine this time and far more realistic? Let's hope so. Now the tricky part is that Infosys stock in the run-up to the IT companies, in the run-up has already, in the run-up to the numbers has already seen a 5-7% move. So could it be a case that Infosys actually, irrespective of what they indicate, could that actually sell off? Look, my view is that IT is not out of the woods. It is more like a deep swell, nothing more, nothing less. There are contra long buyers who are now churning their portfolio, which is that they're reducing or tweaking or peeling off some gains in banks and they're going back to IT. That I think is more like a tactical trade. It is not a structural trade. The structural trade in India is still banks, and you want to buy banks on a decline rather than chasing IT and assuming that you're going to miss out. If you miss out IT also, Aisha, you're not going to miss a powerful 2 or 3 year rally. It's not a trend. Banks is where the trend is. So while tactically you may say, okay, IT may give another 5%, 7%, but then what happens after that?
Yeah. Okay, so talking about